Joining us right now is Jeremy Allaire, Circle co-founder and CEO. So maybe he can clear up some of this. Jeremy, it's good to see you this morning. There was this shift in terms of the language that we saw on Coinbase's site. And I had asked her effectively whether this was a mistake on Coinbase's side in terms of how they described it, because they didn't know, meaning they'd gotten the wrong information from you, or whether you think that you misdescribed it, they misdescribed it. What happened here?
Yeah, sure. Thanks. First, I'll just say, I can't comment specifically on Coinbase.com's web marketing practices, et cetera. So I would certainly leave that there. What I can tell you is Circle and Coinbase have a very close partnership around USDC. We forged this protocol together several years ago and worked very closely together on the technical standards, the governance standards, compliance standards, the overall approach with this. And that has been evolving considerably as it grew dramatically last year, growing 10x, and then accelerating into this year. And so Circle, just to understand, Circle is the sole issuer of USDC. We are the regulated financial institution that issues USDC. And we in fact, are the firm that is managing the assets that back USDC. We are getting attestations from major accounting firms on those, and then publishing and disclosing those. And all of that process is sort of also gone through Center, which is the partnership vehicle that we have with Coinbase.
So, Jeremy, though, here's the issue. People look at stablecoins, and when they're told that it has a cash value of $1, they think of it, and I referenced this yesterday, a little bit like a money market account. A lot of people think a money market account is going to give you $1, and they'll always give you the $1 back. But the truth is that if there's a run on the bank, if you will, or a true problem, you could get 98 cents on the dollar, 97 cents, or what have you. And because it's really not backed by dollars per se, but by other assets, could be treasuries, but there could be other securities in there. And so the question that I think the public wants to understand, and this is the regulatory issue, is, what is the backstop for a stable coin, and was it being described properly from the get-go?
Yeah, absolutely. So it's a great question. It's a major topic. Stable coins in the United States, issued by regulated financial institutions like Circle and others, operate under the supervisory and regulatory framework of states and state banking supervision. So that's where they sit today across the board. And within those, there are different rule sets, but under money transmission law, we operate very similar to a PayPal or a Stripe or a Square or a company that is a payment system operator, where they may hold a lot of balances associated with people who are holding value with their payment system. So PayPal, for example, I think has $35 billion. And they don't go out and disclose, what's the makeup of that. They don't actually share any of the income that they get from that with their users. But with stablecoins, it's a little different. And when we launched USDC, people were concerned about early stablecoins that were unregulated. They didn't have regulatory supervision and standards around them. And so we wanted to take it a step further and start providing, at a minimum, just a third-party auditor and accounting firm to kind of attest to it. Now, what's happened is these have grown so fast is that the market wants more information. And some of that's been driven by concerns with offshore actors. Some of that's just, I think, merited. People want to better understand that. But the really critical thing for the market to understand is that, these operate under a consumer protection mandate and a regulatory mandate today for one-for-one redeemability. And that's really key. And then the second is we're going above and beyond. We're going way above and beyond what we're required to do from a regulatory perspective. Now, we want to go further. We want to talk about liquidity profiles. What happens if there's huge outflows for a month? And we're going to be doing that. I think the even bigger thing, though, and this gets to the regulatory conversation, the DC conversation, is these are getting so big, and we believe they're going to be very core parts of the future of our economic, banking, and payments infrastructure, that ultimately we do need new federal supervisory frameworks around this. And that's one of the reasons why earlier this week, we announced that we intend to file to become a national commercial bank focused on a full reserve digital currency-based payment system model.
So what does happen, Jeremy? Can you answer people who hold stablecoins, specifically U.S. dollar coin? What happens if investors in this particular coin redeem their coin for U.S. dollars en masse?
Yeah. It's specifically designed to accommodate that. The liquidity profile is specifically designed to accommodate these stress scenarios. So you're able to get out of
corporate.
That's right.
Corporate debt as
that's
liquidly
exactly right.
as U.S. dollars. It's as liquid as U.S. dollars. It's as liquid as U.S. Treasuries.
That's right. So there's a framework that exists for liquidity from Basel III. We're following that framework. We've always followed that framework. And additionally, at the end of the day, the backstop is ultimately Circle's balance sheet itself, above and beyond what happens with the market itself.
Shepard Smith here. Thanks for watching CNBC on YouTube.